It's probably just the start. That's what my next guest says about this morning's wave of M&A news that adds up to $16 billion. Joining me now, Frank Aquila, a partner at Sullivan Cromwell, a law firm that specializes in mergers and acquisitions. Frank, welcome back to Bloomberg's Bottom Line. Always good to have you on.
Good to see you, Mark.
What is going on today? $16 billion in one day?
Well, as you know, most deals tend to get announced over the weekend or Monday morning. It just sort of works that way from a disclosure standpoint. The fact is that what we saw today was a very good, decent Monday in terms of deal announcements. We've seen bigger ones. I suspect during the course of the year we'll see even bigger merger Mondays, but this certainly continues the trend we've been seeing really since the middle of last year.
You're not surprised by this, are you?
No, I mean, this is really very consistent with what I've really been expecting over the last 14, 15 months. The first half of 2010 was a little bit slower than expected, I think, with the Greek debt crisis, but it certainly has picked up.
And Frank, we're on the screen, we're showing some of the deals that were announced today. Any one of them surprise you? Anything stand out?
No, I think what your listeners should be looking at is the breadth of deals in terms of the size, in terms of the industries. Some of them were expected, some of them are unexpected, and I think that's going to be a key to what we're going to see over the next few months, and is also a hallmark of a bull market, so to speak, in M&A.
Let's talk about that in just a moment, but President Obama, he spoke before the Chamber of Commerce today, and you did note the irony that the president is asking members of the corporate community to hire more, but it seems that they may be more focused on making deals right now.
Well, at the moment, I mean, hiring is picking up, and I think for the broader economy to flourish, we're going to need unemployment to decrease. But clearly, the corporate community is looking at strategic acquisitions as being a very good way to utilize their cash. These are longer-term decisions. You hire someone, they come to work for you today. If you don't have anything for them to do, it's a wasted expense.
Are these deals, the corporate community, signaling that they have confidence in the pace of the economic recovery?
I think it's signaling that they believe that the economy is getting better, that this is a good time to do deals, but that maybe the full economic recovery is not yet underway.
But they want to be ahead of the curve when it does finally.
Yes.
Dominic Chu just gave us an interesting stat. He was talking about some of the M&A that we've been seeing today and previous. Lower interest rates means savings annually of $15 million per year for every $1 billion borrowed. That's a lot of money back in your coffers if you can get a deal done now.
That is, and he was pointing to the leveraged finance market, which certainly has been very good over the last year or so. I think for a lot of the borrowers who were doing big M&A transactions, they are prime credits, so they're even borrowing at lower rates. So there's a lot of interest savings.
You mentioned just a moment ago about the bull market. What is this telling you?
This is telling me that the economy is improving. We're going to see a lot more M&A, and I think that that will have a spillover effect into the broader equity markets.
Talk to me about consolidation in some of the industries. Where are we going to see the most of that in 2011? Is healthcare number one?
Healthcare is one we're going to see. We saw it in 08, 09, 2010. We're going to see it again over the next few years. There's just a lot of reasons why that's going to happen. Additionally, I would be looking at energy, basic materials, but I wouldn't ignore media, entertainment. I wouldn't ignore consumer products or financial services. I think today's deals show that you're going to see lots of different deals in various sectors and across geographies. I mean, we're focused here principally on U.S. domestic deals, but deals are happening abroad, deals are happening in Asia, they're happening in Europe, and I think we're going to see a lot more of that, and particularly cross-border deals.
Frank, in our last minute, are premiums rich right now?
I don't think so. I think there's a lot of focus on premiums, but to be blunt about it, the premium really just reflects what the stock market thought on Friday and what the price that was paid. If there's a lot of takeover fluff in a stock, someone expects it to be taken over, the premium is likely to be low.
And you make a point of that in the Beckman deal, right?
Yeah, and it was known that that company was on the block. People knew a deal was near, so the price went up. If there is a transaction for a company that no one expects to be taken over, then the premium is going to be larger.
But in the Huffington Post AOL deal?
Yeah, that's what happens. In those type of situations where it's unexpected, you're going to have a higher premium. So I look at what's the real value as a standalone, what's the value on a combined basis, and is it a good deal for the acquirer shareholders as well as the selling shareholders.
All right, Frank Aquila, Sullivan and Cromwell joining us to talk M&A. It's always good to see you,
Good
Frank.
to see
Thanks
you,
so
Mark.
much. I appreciate it.